Hey, what's up? I'm Russ. This is Dapper Dividends, and today I'm going to tell you exactly why I am a dividend growth investor, what my goal is, and why I am achieving that with dividend growth stocks. I'm going to go over my bridge account portfolio, the dividends I received, what I bought, and then I'm going to wrap it all up with a company that I think is undervalued and a solid dividend growth company. But before I get to that, please, if you find value at any point in this, like and subscribe. It means the world to me. I'm getting really close to 1,000. That's my first benchmark. That's the first milestone. Help me achieve that. So let's get to it. So we just got back from Chicago. We went to Macy's on State Street, which used to be Marshall Field's. Marshall Field's is near and dear to me. My grandmother took me there when I was a little tyke, and we went by the Walnut Room and saw Uncle Mistletoe and all that, which is just steeped in Chicago history. And my grandma used to work there in the 1930s and 40s, which is really cool for me. So yeah, we usually go see Santa Claus and get our family Christmas card picture taken there. But not this year. It was shut down like most things. So we made the best of it. We still went into the city. And I did my daily knowledge drop video from inside of Macy's. And my family made a brief appearance on that as well. And oh, check this out. Thank you to the folks at Progear Rental. Steve LaMonica hooked me up with this shirt. If you are in Chicago and you need studio photography equipment, Progear Rental, definitely give them a call. Check them out. They will hook you up. So what have I been doing with my time as a dividend growth investor, and why am I dividend growth investing? It's really not that difficult. I am building a bridge account, number one. Now, my bridge account is what's going to get me by from when work becomes optional, which is kind of the main goal, is that I want dividends covering my monthly expenses without the mortgage. I will not have a mortgage, and dividends will cover our property taxes, all of our utilities, any bills that we pay to live. And that's basically the rough idea that I have, is what I'm going for. We want passive income to cover our bills, because then work will be optional. Now, as I've said before, I have a feeling, a sneaking suspicion, that I'm going to keep doing what I'm doing because it's in my blood. But I won't know until I reach that point where work truly is optional and my passive income from these beautiful blue chip companies is covering all of our daily living expenses and our yearly expenses at that. And basically that's what I'm doing. And I'm achieving that through the bridge portfolio. So every time I buy something, it's just another beam, it's another girder, it's another rivet. It's going right into that bridge. Now, to achieve that, there are 8,760 hours in a year. So obviously I need $1 for each of those hours. So my first goal is $8,760 in passive income coming into me per year. All right, so what did I receive dividends in? I received a bunch of dividends. Every third month is my heavy month, I guess, my hard hitters month, except for Altria and AT&T, which I do receive sizable contributions to my dividend income from. The month of December has been really good, with a lot of companies kicking me the dividends and returning that profit to the shareholders. Let's take a look at what I received dividends from. $2.76 from MetLife, $17 from 3M, $12 from McDonald's, $13 from Duke, and $22 from Prudential. That did total $68.81. Now, the cool thing is that I've been buying a share of Pepsi every single week. Well, just from this week alone, almost 47% of the cost of the share of Pepsi I bought was paid for and covered just by dividends. Now, to me, that is awesome. That is a nice little discount. I look at it as getting on that share of Pepsi. And I did only have a few buys this week. One share of Leggett and Platt at $41.89, a share of Pepsi at $145.98, and 2 shares of Merck at $79.21. So here's the updated income breakdown: $1,738 a year, which translates to $144 a month, $33.42 a week, $4.76 a day, and 19 cents, almost 20 cents an hour, which I will eclipse this week with the purchases that I'm doing. And as I do say, you really do need to have more than one stream of income because it is really risky, and it is akin to a business having one customer. If you have one stream of income, if that customer leaves or that stream of income dries up, well, now you're going to be in a bit of a bind trying to find another stream of income. So that's what's been going on in my bridge account. And what am I going to buy this week? What's at the tippy top of my shopping list? It is Cisco, ticker symbol CSCO, currently paying a 3.17% dividend yield. That's 36 cents a quarter, or $1.44 annually. What I like about them is their technology hardware. Predominantly, companies need that. They are akin to selling the picks and shovels to the gold miners, is the way I look at it. And they did buy back about 1.4% of their market cap worth of stock the past year. The earnings per share payout ratio for the dividend is about 58%, but what I really like is the free cash flow payout ratio is about 40%. The dividend is well covered by profit and cash flow, as you can see here, which I pulled from Yahoo. Couple valuations. Yahoo has them at $48.29 target price. Morningstar is $48. CFRA is $52, and Simply Wall Street coming in at a heavy $64.97. When you average those four together, we get $53.32, which is about 15% undervalued. I think that's awesome. I think that's an incredible buying opportunity. Solid company, stable dividend, lots of cash flow, great balance sheet. I don't think they have any problem maintaining and growing that dividend for the foreseeable future. So hey, in this market today, it's really hard to find companies that are undervalued, and I think they are a solid undervalued dividend growth company that I am going to be buying more of. Yeah, so follow me on Twitter at RustyRam78. Check out my podcast, which I'm doing once a week, Dapper Dividends. It is on all your major podcatchers. And the friendly disclaimer for you is that none of this is financial advice. I am not a licensed financial investment advisor. Before investing, you really should get with a fiduciary and have them do an assessment of yourself, your tolerance, your capital. There's so many different things. Everybody is going to have a different investing strategy and goals. So this is just my thoughts and opinions shared for fun and entertainment. And obviously, I am long everything that I talked about in the video today, and I will talk to you in the next video.